What is up, you guys? Tesla has had a very volatile week, and in this video, we're going to go over this bullish shark pattern that you guys see here on the screen. We're going to go over what the requirements of entry are, how you could have made a 114% return in the past 2 years. We're going to go over what the target is and how I plan to play this. We're also going to talk about the daily chart because we have been watching this flag here, this squeeze that's been occurring. I'm going to talk about if I think that Tesla's going to break through 260 or if we could actually see them move back down to $200. If you guys don't know who I am, my name is Peter DiCarlo. I've been trading full-time for the past 8 years. I have a Discord community that's free. All of my trading resources are in the description there. And I have over 12,000 members in our community. I've worked directly with over 2,500 mentees, and my goal is just to make trading simple. Currently, this is a bullish a bullish shark pattern that is currently playing out. And you can see that our take profit is up here at about $264.35, and our stop loss is down here at $215. And it's because of our good success rating with the actual better RVR, which we're going to talk about how you would enter this in a moment, with the ultimate side that we're playing the float of the market. So if you guys have never heard of this, to be quite honest, one of the easiest ways to make money is just to trade with the trend. Like I know it sounds dumb, but if you're somebody who starts getting into coding, or nowadays a lot of people get into scripting, and you start to actually learn quant trading or start to actually look into the fundamentals of running a script or some sort of strategy other than like, oh, I'm going to play this technical analysis. If you actually start to learn how to run strategies, you will understand that, number one, the law of averages is extremely important. But number two, if you're just playing with the trend, the overall float of the market moving in the direction that you ultimately want will not only make you a better trader, but over time will always make your returns significantly better. You can see here, I do run bearish setups on this, but ultimately, if I wanted to just get rid of the 117 trades and pull this down to maybe 50 trades, I would just get rid of the bearish situations, because most of the time, I believe as a long-term investor in Tesla, that Tesla will be going up more than it will be going down. And that's ultimately why you can have a pretty bad risk versus reward, but because you have very high success rates. There are scripts I have where you have 80-90% success rates, but your risk versus reward is like 0.2. It's very, very bad. But something that you have to think about as a trader is, what will you handle better psychologically? I like the 30-40% success rates, but 6-1, 7-1, 8-1 risk versus reward. But psychologically, it takes a lot to handle that. You have to be a seasoned trader in order to be okay with that low of an accuracy. But that's why when I create scripts for our trading community, look for high win rates, at least 70-75% success with good risk versus reward, because I want everybody to be able to hop into the community, to be able to follow our scripts and follow our trading bots, which we have free trading bots in the Discord community scripted by myself. And the goal is just to make it a very consistent and profitable experience for people, because it's against human nature to want to only be right 30% of the time, but have outsized returns. It's just not human nature, and it's not realistic for many people. So the perceived likelihood of achievement is very low for most people. Now you can see ultimately here, we're looking at a take profit up at 263.40 and a stop loss down at 413.26. The thing that I want you to understand is that this harmonic setup that we have here, this is not how you would normally play a harmonic. A normal shark harmonic would be played on like a 1 or 2 minute chart, which is what I day trade with every day. And it's normally a take profit up around this level. It's all based on Fibonacci's and stops on a lower low. But you can take the bones of whatever indicator you want, which is what I've done, and then you can input your own strategies to see overall how you would perform. And that's why this works, is ultimately because you're just playing with the float of the market to the up or downside, because we're playing reversals. That's ultimately what we're looking at. We're playing quick reversals. And in this instance, you can see that with a 70% success rate, if we were to actually go long at this very moment, right here, set our take profit up at about 264.50 and our stop loss down here about 214. So you can see this is a very wide play. This is not something that is going to happen potentially within the next couple of weeks. our pattern time limit, which basically means how long the pattern will be allowed to play out, or how long the worst case scenario this trade will probably take to play out, is out until Tuesday, August 17th, or October 17th. So Tuesday, October 17th of 2023, which means, yes, we do have a potential 8% move to the upside, but that could take 39 days, which you have to, if you're trading with options, you have to bake that into your strategy. Now, looking here, we also know that, look, the take profit is up around 260. If we were to look at the daily chart, which we usually will use multiple time frames, it's probably one of the best things to do, you'll notice that obviously we have a very strong resistance level at 260, and it's the last level of volume on the volume profile. So these big bricks of volume on the right side of your screen, these are basically going to show you at what levels institutional investors are buying and basically where all the volume is placed. Big areas of volume tend to act as major resistances, major consolidation zones, and major supports. These very thin areas of volume, like up here from about $262 up to $300 and down from about $240 to about $200, these are areas where there's not a lot of volume, and usually stocks will rip if it's breaking through a resistance into a low area of volume, or it will crater if it's breaking through a support level through low areas of volume down to $200, which is why the past couple of weeks you've been seeing within my title, and it's not clickbait, it's like $300 potentially, because it's like once we break through this pivot, we're running right up to 300 in my opinion, not within a couple of days, but within the next couple of months. Vice versa, if we break 240, we're going to drop like a cannon down to $200 within just a couple of weeks. So that's why all of the things, it's not that I'm going back and forth. It's like I'm just sitting, I'm waiting, I'm chilling, I'm watching this thick area of volume, and I'm waiting for this breakout. But when I see something like this come through, I say to myself, well, 70% of the time we hit this target. If we push through 260 and we hit this target at 265, the chances of us continuing to run to $300 is very, very high. So in this moment, my thought process is we can continue, if we break through $260, to use the 11 SMA and our average true range trailing stop loss to basically on the breakout, use it as a trailing stop loss, not just to hit the 264 target that's up here, but more so to ride all the way up to 280 and potentially 290. And we'll talk about how I'm going to go about the specific options that I'm looking at and why I would price them and what specific time I would be looking at. Looking at this in conjunction with the setup that we have on the daily chart, it looks pretty decent to go long. I would really like to see a pullback to 230 because then our risk versus reward is significantly better. But at the end of the day, it's not the end of the world. Now, for a lot of people, you might be asking, what did I mean using the 11 SMA as a trailing take profit? So if we were just to use this breakout as an example, or really any of these breakouts, which you can see, if we were to take the replay button and pull it back here, this is usually a good momentum indication. So when we see price break up over, let's just go, for instance, here to 1 speed. So if we were to play this here and let this go over here, boom. So we end up closing and we hold multiple candles over the 11 SMA and multiple candles over this daily ATR. So if we could just allow this to play out, instead of being like, oh, what are we going to do? Are we going to take profits here? Is this overextended? Oh, look at it. Dude, all we have to do is just use this 11 SMA as a trailing take profit. So we're just going to allow the trades to play out, and we're just going to use the 11 SMA. 2 closes is usually what I say. So boom, if you wanted to be conservative, you could have closed here. And that would have been an absolute massive return, right? 73%. We're not going to act like that wasn't absolutely crazy because that's the lows from December up until February. And so ultimately what we're going to do here is hopefully if Tesla breaks through 260, we're going to use the 11 SMA or the ATR trailing stop loss up here, right? At like 253, 256. So that's the move. If we break through 260, we continue to use it up through 280, maybe 288, 290, 300, etc. So ultimately, I'm not super bullish on Tesla. What I am probably going to do is grab some October October put, or not October puts. What I'm probably going to do is grab some October calls for Tesla, maybe third week of October, maybe even just be safer and go out till November. And I'm probably going to go with $260 strike. And the reason for that is I think that we'll have more than enough time to get this breakout. Even if we sit here for the next, worst case scenario, 20 days until September, 27th, I'll still have more than enough time. And if I go out till the third week of October, maybe I'll actually go out till November because we'll have earnings. But what I'm really going to be looking for is the push up over 260 and holding, or I'm going to stop out if we break 240. That's the move. And then use this ATR trailing stop or the 11 SMA as we move our way up to $300. If you guys want a better understanding of everything that I talk about in this video, other than a quick explanation, go check out our Discord community. It's completely free. We have courses there that are completely free, and I have literally 10 courses that are going to be free for you guys. Basically, I had a mentorship group, which we're relaunching now. I'm shooting 60 hours worth of courses and lectures. I have over 100 PDFs for you guys. I have a lot that's going to be coming out in 2024, and it is all going to be for free. Like I've said this before, like I want us to be literally the Alex Hormozy of traders helping traders. When it comes to trading, I want to be the people who are out there giving the best advice, and most importantly, for free. And so we have a lot of amazing content coming for you guys, a lot of great courses. Go check out the Discord community, 12,000 members over there. We only have more and better content coming out. Thank you for all the support, and I'll see you guys next time. Peace.